Poland's economy is one of the great success stories of the modern European era. In the 3 decades since the collapse of communism, it has transformed from a centrally planned state into the 5th largest economy in the European Union, achieving an almost uninterrupted record of GDP growth. With a GDP approaching 740 billion euros, it is an undeniable engine of regional growth. Yet, this triumph is tempered by persistent structural challenges. Poland's financial system operates on a tightrope, balancing the demands of rapid growth with the constraints of EU fiscal rules and the pressing need to improve the everyday financial stability of its citizens. This is a story of strategic foreign investment, a surprisingly vibrant domestic stock market, and regulatory systems designed to bridge the gap between East and West. We will analyze the structure, stability, and future path of Poland's financial infrastructure, from its central bank to its retail investors. The macro picture: growth, inflation, and the Złoty. At the macro level, the Polish economy is defined by its strategic resilience, but also its vulnerability to external shocks. The central regulatory body is the National Bank of Poland, NBP, responsible for monetary policy and maintaining price stability. Unlike many of its EU peers, Poland retains its national currency, the Złoty, PLN, which provides the NBP with crucial independence in setting interest rates, a flexibility often debated as a long-term benefit or hindrance to full Eurozone integration. Historically, Poland has faced bouts of high inflation, driven recently by global energy costs and domestic wage growth. This has necessitated aggressive interest rate hikes by the NBP, directly impacting the cost of living and the crucial mortgage market, which has historically relied heavily on variable rate loans. A major philosophical tension in Polish finance is the debate over convergence, the speed at which Polish living standards and regulatory maturity catch up with Western Europe. While GDP has surged, the goal of adopting the euro remains a distant, politically charged target. The stability of the Złoty, therefore, becomes a national economic symbol, requiring the NBP to constantly manage expectations and capital flows, particularly from its 2 largest trading partners, Germany and the broader Eurozone. 2. Regulatory architecture: the role of the KNF and EU integration. The stability of Poland's financial markets is overseen by a complex regulatory framework designed to meet stringent EU standards. The key supervisory body is the Polish Financial Supervision Authority, KNF. The KNF's mandate spans banking, insurance, capital markets and pensions, ensuring compliance with both Polish law and the vast body of EU financial directives, such as MiFID II, Solvency II and Basel III. This integration into the European financial market is crucial. Polish banks must maintain high capital adequacy ratios and stress testing protocols identical to those in Paris or Frankfurt, minimizing systemic risk. A primary historical challenge for Polish regulation was the large number of FX, foreign currency mortgages, primarily denominated in Swiss francs, which led to a major legal crisis when the Złoty depreciated. The successful, albeit costly, resolution of this crisis, which saw Polish courts side with consumers against banks, demonstrated both the independence of the judiciary and the political will to protect citizens from systemic risk. This episode highlighted the KNF's ongoing effort to strengthen consumer protection regulations and increase financial literacy across the country. 3rd, the banking system, foreign capital and consumer debt. Poland's banking sector is stable, profitable, and highly integrated into Western Europe, yet it carries unique characteristics. The vast majority of large Polish banks are owned or controlled by Western European financial groups, e.g., those based in Italy, Spain, and Germany. This foreign ownership has injected capital and modern risk management practices, but also means that a significant portion of profits flows out of the country. The largest Polish state-controlled bank, PKO Bank Polski, acts as a vital counterweight, playing a strategic role in government bond markets and key national projects. On the consumer side, Poland has historically had lower rates of personal debt compared to Western nations, but this is rapidly changing. The recent housing crisis has driven up the cost and necessity of securing large mortgages, while consumer lending remains brisk. A unique regulatory feature is the establishment of the Bank Guarantee Fund, BFG, which provides deposit protection up to €100,000, aligning Poland directly with EU standards and maintaining high public trust in the banking system. 4. Capital markets, the Warsaw Stock Exchange, GPW. The Warsaw Stock Exchange GPW, known as Giełda Papierów Wartościowych, is the dominant financial hub of Central and Eastern Europe, CEE. It plays a crucial role in providing capital access and serving as a regional gateway. The GPW features a robust main market and the New Connect market for smaller, high-growth companies. Its primary index, the WIG20, tracks the 20 largest firms, heavily weighted towards energy, banking, and technology. Unlike its Western peers, the GPW has seen significant listings from neighboring C countries, positioning it as the region's preferred listing venue, a point of national financial pride. Crucially, Polish citizens are a part of this infrastructure. Retail investment has grown significantly, driven in part by mandatory private pension funds which allocate capital into domestic stocks and bonds. Furthermore, the government's development of the Employee Capital Plans, PPK, a voluntary workplace savings scheme, is designed to further increase domestic capital formation and citizens' direct participation in the financial infrastructure of their own country, lessening reliance on foreign capital. The GPW is therefore not just a trading venue, it's a tool for national economic engagement. That's the future. Eurozone, demographics, and fiscal policy. Poland's financial future hinges on navigating three complex challenges. Eurozone. Question: the political and economic debate over adopting the euro persists. While adoption would eliminate currency risk and reduce transaction costs, it would surrender the NBP's monetary independence, potentially hindering Poland's ability to manage its own inflation and growth cycles. Demographics and pensions. Like much of Europe, Poland faces aging demographics. The financial sustainability of its pension system is a pressing issue, requiring continuous reform and the strengthening of private savings schemes like the PPK to ensure the financial security of future retirees. Fiscal policy and EU funds. Poland is a major beneficiary of the European Union's cohesion funds and the Recovery and Resilience Facility, RRF. The strategic deployment of these vast sums, totaling billions of euros, into infrastructure, green energy, and digital transformation is critical. Success depends on the government's ability to meet EU rule of law requirements, unlocking access to these funds, and ensuring financial stability over the next decade. Conclusion: the quest for financial convergence. Poland's financial and economic story is one of spectacular growth built on a stable EU-compliant regulatory base. Yet, its quest for full convergence with Western European standards is an ongoing battle against inflation, demographic shifts, and the political decision of whether to trade monetary sovereignty for the stability of the euro. The success of the Złoty, the vibrancy of the GPW, and the stability of its banking sector all testify to the robustness of its system. The future lies in enhancing the financial security of its citizens, ensuring that the fruits of macroeconomic success are widely distributed. If this analysis of Poland's financial infrastructure and challenges has been insightful, you will find valuable comparative context across our channel. For the impact of interest rates and inflation on everyday life, watch our video on the Polish housing crisis and its effect on mortgages. For a look at the systemic philosophical issues driving financial instability, check out our video on the Polish soul, identity, aspiration, and the path to cohesion. Please like this video, subscribe to World Perspective, and join us as we continue to explore the complex challenges and constructive solutions shaping the global economy.